The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 25 October 2019. This should be brief. I've got to go to the airport shortly. From Economa, the demographic depression will overwhelm central bankers over the upcoming decade. The decelerating growth and or outright decline of the working age population is clearly visible in every part of the world. This article describes where the deceleration began and the extent of the deceleration and declines. The reason this is so important is that the majority of economic growth is driven by the rising demand represented by the growth of the working age population. Very good read. Suggest you all do it. Basically, the theme that I've had most of the year, which is the truth, which means the overall global economy is contracting, not expanding. Certainly there are exceptions in that, but they're minor relative to the overall aggregate, which means slowing down, contracting, less economic activity, etc. For Market Watch, German economy continues to struggle with manufacturing troubles spreading to services. The German economy is struggling. New data reported on Thursday. The IHS Market Flash German Manufacturers PMI inched up to 41.9 in October from September's worst decade of 41.7, which is still a reading that shows the factory segment of the economies is in dire straits. Readings below 50 indicate contraction. And from Reuters, Japan factory activity shrinks at quickest pace since 2016. In October, flash PMI, and this is the Purchasers Managers Index. Basically, how much are you buying? Are you expanding or contracting? Obviously, we see more contraction. This is out of Japan. From CNBC, Caterpillar reports earnings that are badly missed by the street, cuts forecast again. Allow me to digress a bit, but back when the commodities boom started in the early 2000s, Caterpillar was really a safe way to play that because in the modern era, going back to the gold rush of the 1880s, 1900s, the early gold rush to California, 1849, it was the picks and shovels, those guys that sold those, that really made out pretty well. And a lot of the miners never really discovered anything of merit. Some did, of course. So buying Caterpillar is the modern day equivalent of selling picks and shovels. So it's a pretty easy play to make, pretty safe, large cap stock, etc. Well, now you see just the reverse. I mean, this next boom will not be in the commodity sector overall. The agricultures are going to go up in price because of food shortages that are, I won't say imminent, but probably will be well noticed by the end of this year. Regardless, be prepared, but the overall commodity sector, I think, will be contracting like everything else. So you're not going to see the big move, probably not even in the base metals. My forecast for years has been at the very end, meaning before the reset is forced upon everyone, that really only the precious metals and whatever's really needed and in short supply, such as food, will be going up significantly from the commodity sector. I don't think it's going to be an overall commodities boom, which many others do think. It's not my thinking, at least at the present time. Yes, I am willing to change my mind with new data. And it's hard not to get Mission here a couple times a month. He's a good thinker, and it was fun to meet him. Only met him once, but regardless, Mish talk. China's growth much worse than reported. What about the U.S.? China doubles value of infrastructure project approvals to starve off economy slowdown amid the trade war. The South China Morning Post reports China doubles value of infrastructure projects approvals to starve off the slowdown. And you can read the rest of the article here. I'd say that's Zero Hedge, Mish Talk, a few others are probably worth your perusal on a weekly basis. And, of course, our blog as well at themorganreport.com. Just pull down the blog, and a lot of the data and commentary that I have every week is on there, along with the interviews that I do, usually a couple a week. And before moving on to this next article, I'll make some comments briefly here on the gold and silver markets. As I'm doing this recording, which is morning of Friday morning, 25th Gold is up over 1,500 and silver just made it up over 1,800 today. My thoughts are still what I've given to my subscribers some time ago, and that is that I still think we're going to see a lower price on both the metals. Not significantly lower, but I am looking for the 1450 area. Does that mean 1450 exactly? No, if it gets to 1455.32, I would consider myself correct. But could be wrong. It is basing around the 1500 level, but it goes both above and below it. And that could be it. I don't know. I'm a big believer that the market knows more than anybody, regardless of how the price is determined. Manipulated or not, the price is the price. However, I do think that there are more pressures based on the commitment of traders, the way it's trading, and actually small reaction to input from the news that might drive it higher under more bullish conditions. So time will tell. I do think we're able to see higher prices by the end of the year, probably able to take out that 1550 level. But we only have a couple months left, November and December. So be careful. It might be a time to build cash. Certainly, if you don't have any precious metals, this is a time to consider them before they go considerably higher over the next few years. But as far as short term is concerned, it's really indeterminable right now, but I lean toward it going lower, not higher, over the next short term, meaning the next few weeks. Time will tell, and of course I'll be back with you next week with another update. I'm going to keep this one very short. I need to edit the file slightly and upload it to the server, and then I'm off to the airport for another adventure. And I will be back with you next week on the 1st of November. And let me just add on and finish with this. As you know, it's David Morgan of the Morgan Report, and I actually believe that right now is the best time in human history to get rich. That's because the wealth transfer that's about to happen in the global economy is going to be massive. If you'd like to prepare yourself to get wealthy from the coming economic changes, be sure to visit my website, themorganreport.com, and read the blog at least on a weekly basis. Get on our free email list at themorganreport.com, and make sure you don't miss any of the interviews I do or any of the educational webinars I provide. All that is for free. So again, go to themorganreport.com, get on our mailing list. And if you really want the inside track as far as timing these markets and stock picks that few of them no one else has in their portfolio, consider a subscription to the Morgan Report. Thank you, and I will be back next week. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. you'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.